All right, guys, listen up. We have 3 stocks to break down in this video, all of which are breaking out right now. We're going to go over the charts, why these stocks are breaking out, key levels that I'm looking at, what I'm looking to do. But before we actually dive into the video, do you guys like free money? If you do, don't forget to get up to 16 stocks from Moomoo, the sponsor of today's video, by using that link down below or by going to stocksurfest.com/Moomoo. Once you guys open up your account and fund it with at least $100, you get 5 stocks right off the bat. And if you fund your account at least $1,000, you get 10 more stocks, totaling 15 stocks, each up to $2,000. And listen to this, guys, if you fund your account at least $5,000 on top of those 15 stocks, you also get a free share of either Tesla stock or Expedia stock, which that part of the promo is limited time. So use that link down below. And of course, full disclosure, that is an affiliate link. It helps out the channel. I appreciate you guys as always. And with that being said, cheers. Let's dive right into the video. So right now it's about 2:05. Well, I guess it's exactly 2:05 p.m. on the East Coast, and the markets are up all across the board. I'm talking the Russell's up 1.3, the Nasdaq's up almost 2%, the S&P's up 0.9, as we have the Dow Jones up 0.5%, and the VIX down about 5% as the metals, let me see here, guys, the metals, we have gold up 0.7 as we have silver up 0.4%. So we're green all across the board. The VIX is down 5%. And let me see what oil is up to here before we do dive into these 3 stocks, guys. Oil's up as well, barely, but it is up 6 cents a barrel. Now it's over $80 a barrel. I'm not sure where you guys live, but the prices of gas, or the price of gas, has been going up here in Jersey. I think it was at $3.30 for regular a couple of weeks ago. Now we're pushing $3.60 again. Gas is going up in price, guys. Where are you watching this video from, and where or how much is gas where you're watching right now? Let me know in the comments down below if you guys want to. That is no pressure, of course, as always. So the first stock out of these 3 that I want to break down is Roku, and I've been very critical about Roku here on the channel, guys. I think this company doesn't have much of a moat. Call me crazy. That's what I believe. And if you guys don't know what a moat is, it's essentially another way of saying a competitive advantage, a strong competitive advantage. Does Roku have one? I personally don't think so. Feel free to disagree with me down below in the comments, guys. But it doesn't really matter right now because the stock is up 24%. It's completely breaking out in the short term here, which is insane. And it looks like here they did negative 76 cents EPS. So they lost money on the quarter. That must have beat the estimate, though. Let me see here, guys. Yeah, that beat the loss of $1.27 expected. And guess what? Sales also beat for the company. $847 million versus $770 million expected. So they beat EPS by a long margin, and they beat sales as well. And it looks like here, active accounts, they reported in Q2 of 73.5 million accounts versus the 72.6 million. That's good. And their streaming hours in Q2 came in at 25.1 billion versus the 24.5 billion expected. Again, that's for streaming hours. Talk about a massive amount there of streaming hours for Roku. And let me see what else. Looks like they guide for Q3 revenue of 815 million, which is above what they just did, and that's actually also above the estimate of $808 million. So pretty good, guys. Pretty good there for Roku. And it looks like here there's a lot of analysts covering this stock, obviously. JP Morgan adjusts Roku price target to $95 from $90, and they maintain, let's see here, what is that? An overweight rating. But on the flip side, we have Jefferies. They raised their target, but they have an underperform rating. But it looks like here a lot of these companies raise their targets, whether they have a buy, an underperform, an overweight. Looks like a lot of them did increase their price targets for Roku, which that, along with the guidance beat, with the EPS revenue beat as well, that's bringing the stock up 24% right now, which is nuts. So keep your eyes on it, guys. And am I chasing it here? No, I'm not necessarily chasing it. But if it does start pulling back anywhere from, the lower mid, actually more like the higher mid 70s, that's where I would consider maybe looking at Roku as a trade. Keyword is trade, not a long-term investment. Again, I don't think Roku has much of a moat for the long term, which makes it very difficult for me to buy it, guys. If I'm buying individual stocks, I need to be positive. Of course, you can't be 100% certain of anything on the stock market, but I need to be so freaking certain, to the point where I'm 99.99% certain that this is the best of class, company in this particular, or in the particular industry. There needs to be a rock solid moat. The numbers have to be there, and I don't think Roku's there for me personally as a long-term investment. These are for long-term investments, guys. If I'm putting money in to an individual stock for the next 5-10 years, there needs to be a lot of promising qualities of that company, which in this case with Roku, I'm not seeing it. I'm not dogging the company, but I personally don't like it too much as an investment. But as a trade, you guys know I'm all for it, like I've said before here on the channel. So the next two stocks are Chinese stocks. And before you guys hit that dislike button or drop a hate comment like, oh, Chinese stocks, they're too risky. Yes, I know. They're risky, guys. Every stock out there is risky. And yes, there is some, elevated risk with Chinese stocks, but they're exploding, guys. They're completely breaking out right now, especially these two that we're going to break down. The first one is none other than Alibaba, ticker symbol BABA. Now it's over $100 a share for the first time in a couple of weeks, or actually months, guys. You can see the stock's up over 5% today, and with today's move, we're actually taking out the highs from the past couple of days and the past couple of weeks, and now we're getting awfully close to the highs from the end of March, early April, being about 105, which is actually where my alert's at, which I believe if we break that point, we could be going up even more here on Alibaba. So they're doing very well today, guys. And the catalyst is because global hedge funds have been buying Chinese equities following the Politburo meeting this week and buying on Tuesday at their fastest pace since October of 2022, according to a Goldman Sachs report. And Chinese stocks rebounded this week as policymakers at the latest Politburo meeting clearly expressed support for capital markets and signaled the introduction of bigger easing measures to drive the economy. In other words, guys, stimulus. There could be more stimulus over there in China. There probably is. So there's a lot of speculation and there's a lot of buying on these stocks because with stimulus comes what? For the most part, higher stock prices, right? The stock market loves quantitative easing, loves stimulus, which we're not going to get into in this video. But you guys probably know that, right? The more they print money, the more they throw cash out there, assets go up in price. That's just how it works. That's why the rich get richer and the poor get poorer, which is a whole nother topic for a whole nother video. But that's how it works, guys. When they print money, asset prices go up, right? And who has assets? Rich people out there, rich, quote unquote. A lot of people have assets, but we'll just say rich, quote unquote people. They have stocks, they have homes, right? Gold, all that stuff. And when money's being printed, who gets hurt? The poor people, because inflation goes up, which means people that are making whatever poor is, I'm not going to put a number on it, but you guys know what I mean. People that aren't making much money, now they have to pay even more money to survive, and they're already living paycheck to paycheck. The poor gets poorer, right? That's where that comes from, and typically poor people, quote unquote, they don't have assets, they don't own stocks, bonds, or houses, real estate, gold, whatever, which you guys know what I'm talking about. We're not going to get deeper into that in this video, but that's Alibaba. And NIO is also moving on the stimulus hopes here, guys. NIO's up over 10% right now. And talk about a stock that's completely exploded. Now we're at 14, almost $15, when just a couple of weeks ago, we were at $7, guys. About 2 months ago, NIO bottomed at $7, and now we're at 15. We've more than doubled. And it looks like here, NIO has earnings coming up on the 9th of August, so that's in about 2 weeks. And Alibaba, let me see here, guys. They have earnings coming up on, let's see here, their earnings are on the 10th of August, so the day after we have NIO's earnings. So yeah, they're both doing very well, and I think Alibaba has a little bit more upside in the short term. I think NIO, at least in my opinion, guys, please trade at your own risk. I think NIO is a little bit stretched. I'm not going to lie. What do you think? Let me know in the comments. But I think it needs a little pullback, and if it does see a pullback, that could open up an opportunity here on the overall bullish momentum that we're clearly seeing as of right now. So what do you guys think? Let me know your thoughts in the comments. Smash that like button. Make sure to subscribe. We're almost at 30,000 subs. And guys, don't forget to get your free money from Moomoo, the sponsor of today's video. Up to 16 stocks, each up to $2,000. Just use that link down below. Open up your account and fund it with at least $100. You get 5 stocks right off the bat. And fund it with at least $1,000. You get 10 more stocks, totaling 15 stocks. And listen to this, guys. Fund your account to at least $5,000. On top of those 15 stocks, you also get a free share of either Tesla stock or Expedia stock, which makes this promo a no-brainer. So use that link down below. And of course, full disclosure, that is an affiliate link. It helps out the channel. I appreciate you all as always. And with that being said, cheers. I'll see you in the next video.